Hi, welcome to today's update, a little bit later than usual. So most of the major economies now have got their kind of fiscal stimulus packages either agreed or well into motion. I think a lot of people think these fiscal stimulus packages are designed to sort of avert the recession. I think the recession is absolutely inevitable. I mean, you can't take that much of the economy and shut it down and not have a recession. A recession really is just two consecutive quarters of negative growth. So basically two separate quarters where you go a little bit backwards. And if you've ever run a business, you know it's not always a straight line up. You're always going to have periods where you plateau and change. You can't have perpetual growth. So a recession in itself isn't necessarily a bad thing. But the challenge that you have with this kind of recession is the liquidity squeeze you get on businesses, because businesses don't go bust from a lack of profit. They go bust from a lack of cash. And if you take all of the cash out of a business, effectively it can't pay its suppliers, and those suppliers can't pay their suppliers, and there's just a huge knock-on effect throughout the entire business ecosystem. And that can't go on for long. So the fiscal stimulus packages are really designed to keep everything liquid, to keep the money moving around the system while we get to get through the recession. And it does look like it would be quite a short, sharp recession, because as soon as businesses get back to work, you've got a really low starting base. I mean, when everything's at zero, everything is growth from then on after. So it's much easier to show, stunning growth for the next few quarters, because you'll be coming off an incredibly low base. The other thing that's been really interesting is just the markets. The markets have been crazy for the last couple of weeks. I mean, obviously we had the fastest ever bear market. So a bear market is where the market drops 20% from its recent highs. So we had the fastest ever bear market. We've now had the fastest ever bull market and the shortest ever bear market. So we're just breaking record after record after record. In fact, the last 3 days was the largest single 3-day growth since the 1930s. So it really has been quite dramatic stuff going on with the markets, and I think also potentially a little bit of overvaluation there as well, because we've got somebody doing an impression of me here. We've got markets really are kind of a little bit toppy. I'm sure there's a bit of vertigo up where they are now, so I think we'll have to watch it. The futures are down today, but we really just need to get through Friday, I think, and get into the weekend, and then we can relax a little bit. And I'll be running around with these ones, but we can chill out a little bit over the weekend and see what Monday brings. Bear in mind, nearly every market crash in history has happened on a Monday, so I don't want to set up a bad omen, but just to put that out there. Oh, and another thing that's really important really interesting is the 2008 crash. So the 2008 crash actually had 12 rallies and 15 declines. So the 12 rallies basically caught a lot of people out because they thought the market had found its bottom, and they bought into the market, only for another bigger and even steeper decline to come shortly afterwards. So don't get dummied or suckered into those kind of things. I can't tell you if it's the bottom or not, but just bear in mind that history has a funny way of repeating itself sometimes. So stay safe out there. Hope you're enjoying your time in lockdown and you're getting some productive stuff done and not just hitting the drinks cabinet. And I will speak to you all on Monday. We've got a Julius Baer update call on Monday, so I'll give you the hot gossip from that one. Thank you.